Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, Deckers. We don't talk about this one a lot, but it's become really popular. They got their UGG brands. They've got their Hoka brands as far as running shoes goes, but stock's just off all-time highs that it hit about a month ago, but it's been straight down since, Landon. What kind of data do you have for us?
Yeah, it's a wild ride. I mean, they were trading just over 900 before that last earnings report, shot up, got up to like 1100, and then have just been selling pretty much every day. And now we're actually below where they were prior to that last blowout earnings, which is pretty unusual. And it kind of makes you wonder if there might be an opportunity here. Just as a side note, this is like one of LikeFolio's favorites because this company is the one that made us discover that there's an edge in looking at social media data. We actually, 10 years ago, we had UGG boots data way lower than it was supposed to be going into Christmas, and we actually thought our data feed was bad. It was that wrong. And then we noticed that Deckers came out and warned and had terrible earnings, and the stock sold off. And then all of a sudden we said, you know what, I think we got something here. So this is kind of our origin story stock. So we have a soft spot for this one. But you know, the story this time is not that. It's not that everything's looking terrible. In fact, when we look at justification for this sell-off after this last earnings pop, it's really hard to find. I mean, their data is looking pretty strong. You know, they've got the UGG boots, which have kind of been revived, right? They went away for a while, for many years, but now they're back. And they used to be sort of a winter only company, but now they've got Hoka, even Teva, which is more of a summer brand as well. So they're building this 1-2 punch. And you can see here that the web visits for these different brands of Deckers are doing really well. UGG boots, just kind of so-so, and these are all year over year, so they take into account the seasonality. But Hoka is doing extremely well, and Teva is actually picking up too. So Hoka is that running shoe that is sort of competing with On Cloud and doing really well. I know that their sales for the fourth quarter were up 34% year over year, up to $533 million. UGG sales were up 15 points on a year over year basis, up to $360 million. Their wholesale and direct to consumer were up 20%. International's up 25%. I mean, that's why they went from 900 to 1100, the stock. So really big boost there. And I'll tell you, like, even when we look at happiness, the happiness looks strong. The web data looks strong. The social mentions are pretty strong. So I don't have justification for this sell-off, especially to go below where it was ahead of the last blowout earnings report. I think there's a lot of, kind of fallout from Nike's bad report, and that kind of affected shoes overall. But you can see here on a company-wide basis, 72% happiness, not bad at all. I mean, not up there with On Cloud at 78. But still doing better than Nike and Adidas. And 72 is respectable. It's not terrible. It's not great, but it's good enough, I think. And the web data and the social data that we have with consumer demand really says that this stock should be trading probably higher than it was prior to that last earnings report. So the fact that we're 50 points below before that blowout report is, to me, it's an opportunity. I'm pretty bullish going into this earnings report.
Landon, the two high-profile names, UGG, I think correctly named, frankly, and Hoka, I don't know what that means, but it's a pretty puffy shoe that has a real soft sole. Are there any of the other brands that are jumping on the radar? I mean, Teva, Sanuk, Koolaburra, are you seeing anything, or is this a company driven by these two high-profile names?
It's driven by those two names, but the Teva or Teva, I'm not sure how you pronounce it. I guess it's Teva. Let's go with one of them. It's sort of like active sandals and boat shoes, so more of a summer brand, right? It's seeing a lot of growth. It's not anywhere near the other two. Those are the two flagships. They've got, the 1-2 punch with winter and the jogging and running shoes. So that's more of like summer shoe. So they're becoming more rounded when it comes to the cyclical nature of their seasons. But yeah, it's those two, but they're always looking to add. And I think that this one, Teva, is looking to become the third. We'll see. The growth is certainly there, but it's also starting with a smaller sample size. So the big numbers are easier to produce. produced there. But yeah, it's mostly those two brands, but they're showing a lot of strength. I mean, UGG has revived. I agree, they're not beautiful shoes. They're better than Crocs, but they have revived. And then Hoka is doing extremely well. So I think that this company is kind of getting thrown out, right? Baby with the bathwater. It's kind of getting thrown out with Nike, and I don't think it's deserved. I think this is a bargain here under 900.
Yeah, small share float on this one. That's why the high price on it. It has rallied still 27% so far this year. I mean, this stock was $212 about a year and a half ago. But Landon, when you look at the competition in this space, and maybe some of this consumer sentiment data, and credit cards, Visa, said payments volume slipping a little bit. Is that the concern for a stock like this that's so consumer focused? Is, hey, if they're pulling back on Starbucks, on Nikes, other spots within the consumer area, that hey, they're not immune to it either, right?
Right. I mean, I think that is the main plausible justification for a sell-off in this kind of stock. Is it's not company specific, it's macro, it's wider, it's consumer specific. And if so, then yeah, I could see that maybe people are getting a little iffy on the market. And you can see the market's been, selling recently, nice little pop today, but selling recently overall. And I think that's the concern. So you kind of just got to decide: is this a market bet or is this a company bet? And I think if you're worried about the market and you're worried about just overall when I say market, I mean just general economy and the consumer in general, then yeah, this is one that could get pushed down the priority line for consumers, is to get the new UGG boots this winter or whatever it may be. But all the metrics that we have are showing growth. So people are happy with these products. They're visiting the website more. They're talking about them more on social media. And so the evidence that we have is not agreeing with consumers stepping back on spending on this kind of product. So I'm confident in it. I get the hesitation. I get why this stock could sell off with the market, because it's not an essential. But the data that we have doesn't agree.
Yeah, a $250 decline from those highs that we saw in June. All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, Kev.
Do you think they